Hey everyone, welcome back to the channel where we break down stocks that are moving the needle in big ways. Today we're diving deep into RCAT Holdings, ticker RCAT, a name that's been absolutely on fire lately thanks to some serious tailwinds in the drone sector. Let's kick things off with the bigger picture. RCAT has surged over 50% in the past week alone, riding a wave of optimism around potential U.S. government funding for domestic drone tech under the Trump administration. The stock is trading around $14.50 right now, with a market cap just north of $1.5 billion, and it's showing massive momentum across multiple timeframes. RCAT operates in the drone space with a focus on both commercial and defense applications. Through its subsidiaries, the company develops unmanned aerial systems, surface vessels, and related tech that supports everything from FPV consumer drones to military-grade autonomous platforms. CEO Jeffrey Thompson has steered the business toward all-domain solutions spanning air, land, and maritime environments, and the recent close of the Quaise Technologies acquisition adds wireless power capabilities that could remove major bottlenecks for persistent operations. With 115 full-time employees and headquarters in Puerto Rico, this is still a relatively small but rapidly scaling player in the computer hardware and technology sector. Revenue has been the standout story lately. Fiscal 2026 came in at $40.7 million, a massive jump from just $7.3 million the prior year. The company has diversified across consumer FPV products and other segments, though defense and government-related demand is clearly driving the acceleration. Geographic exposure remains concentrated in the U.S., which positions RCAT well for any domestic funding packages that materialize. On the earnings front, the Q1 results showed continued investment mode with a loss of 22 cents per share, wider than the 14-cent consensus. Full year 2026 net income landed at negative $72 million, reflecting heavy spending on scaling production and R&D. That said, gross profit turned positive at $1.27 million, and management has highlighted a sharply expanded opportunity pipeline tied to allied demand for unmanned systems. The trajectory suggests revenue growth is outpacing losses on a percentage basis, which is the key metric to watch going forward. Looking at the balance sheet, the company ended fiscal 2026 with $168 million in cash and equivalents, against just $27.8 million in total liabilities, giving it a fortress-like liquidity position with a current ratio near 11. Total assets reached $274 million, supported by a big financing round that brought in over $254 million in cash flow from financing activities. Free cash flow remains negative at around $96 million as the business builds out manufacturing capacity, but the cash runway looks solid for the next several years of execution. Valuation-wise, RCAT trades at roughly 29.5 times sales on a trailing basis, with a forward PE that stretches into triple digits given the current earnings trajectory. Enterprise value sits near $1.45 billion. Investors are clearly paying up for the growth story and the defense sector leverage, but profitability milestones will need to arrive to justify the multiple over time. Shifting to the SWOT lens, strengths include established drone sector positioning, diversified product lines, and a robust cash balance that supports scaling. Weaknesses center on ongoing net losses and thin gross margins that still need meaningful improvement. Opportunities are enormous with potential Pentagon funding, the Quaise acquisition unlocking new capabilities, and surging global demand for autonomous systems. Threats include execution risk on large contracts, competition from bigger defense players, and any delays in government budget approvals. On the performance chart, RCAT has delivered 124% returns over the past year and an eye-popping 462% over 5 years, far outpacing the broader technology sector. The recent 23% monthly gain and 50% weekly spike reflect the funding narrative taking hold, though volatility remains high given the small-cap nature of the name. From an intrinsic standpoint, the business is still in hyper-growth mode with negative free cash flow, so traditional DCF models would require aggressive assumptions around future contract wins and margin expansion. The strong cash position and manufacturing build-out give management flexibility to pursue those opportunities without immediate dilution pressure. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.